It never was Cadillac kind. Good morning. Happy Friday. It is going to be a good day by default, ladies and gents. I say it every Friday. Fridays are great days. Let me just get set up over here off screen real quick. Getting a couple charts up here so I can see all my goodies in one fell swoop. Eco Surprise Index, top setups. Let's get this up here, down here. How's everybody doing today? Let me know in the chat while I get my last minute goodies up here. We have a big day today. Big day today in high impact red folder events for the buck. Coming up here in an hour. Let me get my chart rolling, get my water over here so I can not parch myself. Guys, anywhere I go, anytime I leave the house, go anywhere, I can't go anywhere without a big cup of water. I don't know. I've got like permanent cotton mouth. Anybody else experience that except me? Let's get my charts up here. I mean, parched. I am a water fiend. That's really about all I drink other than a morning sugar-free small energy drink now and then. Usually, I kind of go back and forth. Sometimes I'll have a sugar-free energy drink in the mornings to get the kick and going. But for most of my life, I've just taken like a caffeine tablet by itself just to get up and rolling, get rid of the brain fog, get ready to start turning cartwheels, that kind of thing. So I just kind of go back and forth. A lot of times energy drinks will make me like crash out after about an hour. So I don't usually like doing that. I usually prefer just a ton of water and, like I said, a 200 milligram caffeine tablet in the morning. And that sustains me for the whole day. But sometimes I just want that flavor. So yeah, I've been on the flavor kick lately. But here in probably a short period of time, I'll probably go back to just a tablet. Just give me that tablet in the morning. That's all I take. I don't do any other crazy crap out there. Just a little bit of caffeine. I don't drink coffee because coffee makes me crash out after about a half an hour, even if I just drink it straight up black. Like, I don't know. Am I the weirdo over here that coffee doesn't do anything for me, crashes me out? Anyway, I am awake. It's Friday, a great day by default. So let's get the economic calendar rolling. Guys, in an hour, we've got five high impact economic events, red folder events for the dollar coming out. Average hourly earnings, the month over month number is expected to drop. And all these are happening simultaneously, by the way. Also, the core retail sales numbers coming out where they're expected a slight increase. So that is good. And then what's that big, lovely one in the middle, guys? It's called the account killer. They might as well change the name of that. Zambezi lives on coffee. Good old HTO. Yeah. Yeah, like I've never drank. I mean, for most of my adult life, I haven't really drank like soda, like Pepsi, Coke, any of that, because it's just too much sugar. It just knocks me out. Sugar does not do my body good. It makes me sleepy. It's really heavy on me. When you got 48, 50, 52 grams of sugar in just a can of soda, yeah, that's enough to kill me. So I stay away from it. It's kind of funny because when I was in my early 20s, me and the group of friends I ran around with, two of them were brothers, and they made each other a bet that of who could go the longest without drinking a soda. And they were expecting it to be like a week or two or a month or something like that thing. Well, at the time, they had turned it into 3 years to where neither one of them had drank a soda. So I decided to join that. And when I joined that, again, in my mid-20s, I went for years and years and years without it. So I'm sure I probably outlasted them. But once in a while, when I go to my mother's house for Thanksgiving or Christmas or a holiday or something, she always stays stocked up with Pepsis. So once in a while, I'll drink one there, but I really don't get down there. To be honest, I don't get that down there enough. I don't get down there more than I should. I should get down there more, but yeah, when I do, I just like forget all my rules and I'll have a Pepsi. And within 30 minutes, I'm sitting on her couch, slumped over, and half the time I'll just pass out and take a nap. So yeah, it just goes to show my body's not used to it. I can't do it. So anyway, water it is. But yeah, anyway, non-farm payroll. Now, you guys, if you remember, if I open up my graph over here, well, I'll tell you what, let's do this. Okay, if we're just looking at the most recent reports for the NFP, I just don't want that format. Hold on, let me get this back off. There, yeah. There we go. That's what I'm trying to look at. So if you guys remember back in February, we had just from out of nowhere, we doubled up the forecast from 66,000 to 130. And that was after having the previous number at 48,000, which, by the way, that one was revised from 50,000. So that was only a 2,000 difference. Not a huge deal. But that was quite the kicker. That was quite the positive report back on February 11th for the NFP. So really strong. But prior to that, yeah, we had a 50. So these numbers basically kind of on average come out hot and cold, hot and cold, hot and cold. So a hot report there, a cold report on January 9th, and then a very hot report on the 11th. So today we're looking to have a very cold report because think about it. We're going from 130,000 and they're forecasting all the way down to 58,000. I'm actually curious to look at something on the Edge Finder. Let's see here. Economic heat maps. No, let's see. Let's go economic data. Let's go labor market data, NFP. There we go. I want to look at this view real quick. Okay, so obviously huge hot report. Miss, hot, miss, hot, miss. Okay, so there's not really any like major patterns that stick out, except overall the forecasts have been very slowly creeping down. If we're talking about our red dots, okay, this is way back on January of last year, 2025. And you can see the forecast have just been slowly but steadily going downward. To where obviously we had that gigantic report the last time. So yeah, I'm interested. I don't. Let's see that forecast was 66. So yeah, just imagine another red dot right about the same height, and that's pretty much what we're expecting. But yeah, just looking at the most recent reports, miss, beat, miss, beat. So does that mean today's report's going to be a miss? Who knows? We shall see. It's kind of hard to think. It's kind of hard to imagine the report going from 130K all the way down to 60. I mean, that's just a big jump. I mean, it's happened a few times in the past. So I don't know. See, this is why this stuff's hard to predict, guys. And that's why I always say, the only thing that really matters is that we just trade price action. Trade price action, because if we're going to rack our brains trying to act like an economist, we could just literally cramp our brains trying to decide, if this stuff's going to be a make or a miss. Think about it. These guys get paid to all day, every day to crunch numbers, and they still get these reports wrong all the time. Right? So it's basically a coin flip. And that's why we always say whenever NFP comes out, I mean, really about any red folder event, but especially the NFP. When the NFP report comes out, it's just best to sit on your hands, put your favorite chart on a 1-minute chart, get you a bowl of popcorn, have you a cup of coffee, have you a soda, and just watch the report released, see what the number is, and just watch 5, 10, 15 minutes of price action thereafter to see which way it's thinking it's wanting to go, okay? Or maybe a half an hour or an hour if you want to be safe about it, right? It is Friday. It is the last trading day of the week before the weekend hits. So, there's no sense in taking a big swing at something if, just for the sake of taking a swing. I mean, it's all, if you look at the the trading firms out there, the institutions, think about it. Their main trading action is Tuesdays through Thursdays on average, meaning Mondays they come into the office. They're spending a lot of time kind of plotting and planning their positions for the week. So there are institutional positions taken on Mondays and Fridays. That's I'm not saying there's not. I'm just saying the bulk of the activity takes place from Tuesday to Wednesday, or Tuesday to Thursday, sorry. So they're not as active today as they are, let's say, the middle of the week. So just keep that in mind. Again, for me personally, I like to think like a bank. I like to trade like a bank. That's why I look for institutional supply and demand zones on the chart. That's why I like to look at all the economic data as an aggregate, right? This is just one report at the end of the day, the NFP, but it is a big one. It's one of the biggest ones. Euro dollar. Oh, I'm not in a euro dollar position, Zambezi. I'm in a euro pound, and it's not doing great. Not looking good at all. I think it's hanging on for dear life. Yeah, euro pound, it's not looking good at all. I did also get an Aussie yen position yesterday. It's doing a little better. It's kind of acting as my what do you want to call it? Insurance, if you will. What's the word that they use? I call it insurance. What do you call it? Hedge. Sorry. Couldn't think of the word hedge. But yeah, looking at euro pound. Let's go look at that real quick. Now, see, here's something that's key about this position. So when I got into this position on Tuesday, you can see my 8 EMA, my 8 exponential moving average, which is the dark red line up here. See, that was above the 21. Come on now. I'm trying to make sure I got that right. Okay. See right here, that 8, that dark red is above the light red. See, that was the whole purpose for getting in this trade. Well, that was the foundation, I should say. Well, now where are we at? Now the 8's below the 21. So it's not looking good. It's not shaping up to be good, right? We had the strong movement away, the 8 over the 21 there for a while. But then, yeah, basically the minute we got into this trade, that's where everything kind of started collapsing in on itself. So, yeah, probably going to end up turning into a loss. I think I've only got a few more pips left. But such is life. Such is life, right? We just move on to the next one. That's why we take small losses and wait for a winner to run and take away those, the losses and put a little bit more in our pockets. So Aussie yen, though, this is the one I got in yesterday. And by the way, euro pound is off the list. So it actually dropped to a neutral score. Euro pound +4. So the technicals, we just looked at the moving average cross back over to the opposite side. Okay, that's part of the reason we're getting a -1 now on the technicals. So we still have very strong eco scoring because the euro is a strong currency. Well, as of yesterday, it was the strongest. Let's see if it's changed today. Macro scanners, surprise index. Okay, we'll go to our currencies. Yeah, so look, yesterday the euro was at 80%, and now it's down to 66. The pound is still the same weakness that it was yesterday, but euro has dropped from 80 to 66. So let's go look. And it was because I do believe the GDP report. Yeah. So here we go. March 6th. That's today. That was early this morning. We had a miss on the GDP report. 0.3 down to 0.2. Forecasted 0.3, but we missed down to 0.2. And on that note, I was just looking at that report a little bit ago before I hopped on. If we go to the growth numbers over here, GDP growth, and we type in the pound, let's get this to populate. No, that's not the right one. I picked the wrong one. GDP. Hold on a second. Why does that not look right? One second. Oh, I got lightning outside. My window is right here. I have a big window, and I just saw lightning go all across the sky. That was awesome. That was really cool. Okay, let me go back up here and see what. Oh, I was looking at the. Oh, shoot. I'm sorry. I need to be looking at the euro. Duh, Tiger. No wonder it wasn't looking right. Euro, euro, euro. This is more like it. Okay. So look at this. So when we're looking at the report that was released this morning for the Eurozone, that GDP report, obviously it was forecasted up here and we got a number way down here. So one thing I was looking at on this report is how many in a row we had where the number came out exceeding expectations. So see, starting in June of last year, okay, we had the as far as either meeting expectations or beating expectations, everything has either beat or missed expectation. I'm sorry, every report has beat or met expectations ever since June of last year. All these beat or met. So that was a trend I was kind of counting on for this report. But look, for the first time, we missed a report. So it just so happens to miss when we're in a trade, when I'm in a trade. Right. Again, this is why this stuff's so hard to do. It's, we make educated guesses at the end of the day. Sometimes they're right, sometimes they're wrong. And we're at the mercy of the next red folder release. Right? So yeah, looks like we'll take a small loss on that. Possibly, I've got about 2 pips left before it's out. But anyway, just getting back to the top setups. Aussie yen, when I went to bed last night, yeah, it's still at the top. So plus 11. Very bullish. See, this is a lot healthier than that euro pound position. A lot healthier. Because when we got in that euro pound, it was a plus 6. So it was just not as strong of a score. And then literally the minute we get in, it dropped a point to plus 5, and it hung on for dear life for basically the next 3 days. And then finally dropped to a plus 4. So neutral. But Aussie yen, this is a much healthier scoring. This is why I don't like trading plus 5s, plus 6s. But, at the time, the euro was the strongest currency. Pound was the weakest. So it's a good loss. Good loss. Let's see here. Aussie yen. So, yeah, this is a lot healthier. So 8 above the 21. Looking over here on the hourly, we got the 50 over the 200. So this trade came about from a 30-minute demand zone. Right here. And when price came in yesterday, just waited for that bullish candle and got in the trade. So it initially spiked pretty nicely, ended up breaking through this supply zone I was a little bit, concerned with. Not too much, but a little bit. Let's talk about this 4-hour. Well, 2-hour, I should say. See this indecision candle here? So that was the first candle I was a little concerned about. That's why I wrapped a rectangle around it. But I expected it to push through just because of the overall trend and momentum and scoring. And I've got a take profit up under this supply zone up here. So just a few pips below. That's where I've got my take profit. I had initially had it set right here as far as a 2-to-1 reward risk. But overnight, when I went to bed last night, you could see we were right about this area. So I didn't want it to take it out just yet. I wanted to see if we could run it through the top up here because Aussie yen, it does move 127 pips per day on average. So that's more than enough of a chance for it to move up here, right? So again, we were right about here when I went to bed. Now, when I went to sleep, as you can see, we did have quite the drop. And it looks like we're trying to recover now because we did kind of bounce into a newly created demand zone right here. So this right here did become a demand because when we bounced off that demand where I bought in, excuse me, all these candles down here, the wicks overlap the wicks or the candles to the right. So that tells me that this is now an efficient price area on this specific time frame. And then we bounce into this consolidation, and then that's where we got our first gap from here to here. So that represented our first gap from this new swing low to the current swing high. So with that being the gap, I looked at the consolidation below, which is that candle, as the new demand zone, and that's what we're at least trying to bounce into and, you know, back to the upside off of now. So we'll see how that plays out. No matter what, I'm likely going to be closed out of this thing. About the only possible way I would, there's probably no way actually. I was going to say if I get up here to like 111.5 area, and it's close to the end of the day, maybe hold it open, but probably not, guys. It's just not worth it right now with this geopolitical atmosphere we have right now. It's just not. I don't know about you guys, but I'm not too keen on waking up on a Sunday to a 50 to 100 pip gap against me and going on the other side of my stop loss. Gold, yeah, gold's giving us a bearish signal now. Absolutely right. Is it -6 now? Do I need to refresh my edge finder? Because I knew it was -5 earlier. Let's see what we got. Hurry up. -5. So yeah, it's -5. So let's take a look at that. Since you bring that up, kind of interested. And by the way, guys, I'm going to hop off of here just so you know when Nick's stream starts. I'm on at 8 p.m. Central or 8 a.m. Central today. He starts at 7:15. So I'm probably going to change some things around. I'm still waiting for word on that position. If I get that position, what I'm thinking about doing is doing a 45-minute morning session instead of the hour and a half. Because I don't want to be running into Nick's starting on his show. Zambezi, because I know you flip over there, and rightly so. So I think what I might start doing is 6:30 to 7:15. And then as soon as his show starts, we'll just all hop over there. And then when his show ends, what I'm thinking about doing is just doing another 45 minutes after. That way it'll help cover some more West Coast people, maybe some people out in Hawaii. Because there's a whole population over there that, most of these streams here in the States happen when they're asleep or just barely waking up. They haven't had their coffee yet, or maybe they got to take the kids to school or go to work and hide in their office so they can watch a stream. So I'm thinking about doing that. You guys tell me what you think about that. Because I don't want to run. I just don't want to. When I started this time set, it was because that's what Ola Prime had me doing. So I just naturally kept doing it. But yeah, now that I'm working hardcore with Nick and company over there at A1, I don't want to be double dipping, because that's obviously where the biggest population of people are at. So yeah, I'm going to probably start doing that next week. 45 minutes in the morning, finish all of A1 stream, and then maybe another 45 minutes thereafter. Tell everybody to go have a break, 5-10 minute break, go to the bathroom, go get a drink or whatever. And then I'll just finish up my half after that. So hopefully that makes sense. I'll get some posts out for that and all my stream creating. I think I can use the same stream. So like if I cut this off later, or if I cut this off here in 15 minutes, like I'm planning to do, I think it'll stay running, and then I can just hop back on the same stream, the same link. So we'll test that out. We'll figure it out together. But anyway, that's my plan, guys. So, but anyway, Aussie yen. Yeah, there's nothing much to do here. I'm just going to let it do its thing. I don't want to be getting in here and playing around with the stop loss or anything. I'll just let it run throughout the rest of the day, and then likely just go ahead and close it wherever it may be. Hopefully it gives me a little bit of profits to take away from this loss on the euro pound. Again, it's more of a hedge. It's a hedge position, but it's actually the strongest one when we're looking at the edge finder. So I don't know if it's a hedge or not. But anyway, just taking a look at some of my alerts I have set over here. Let me sort this by, newest first. So I've got these alerts set from most recently created to oldest created. So we've obviously looked at the Aussie yen. Let's go take a look at the Euro Aussie. And over here, now Euro Aussie is giving us a -8 score. Here, let me do this. I've got my edge finder set up on my other screen so that I can put them by alphabet. Euro Aussie. Okay, here we go. So yeah, we already know Euro Aussie is giving us a nice bearish score. So on this one over here, 8 below 21 on the daily. That's good. It's in line with Edge Finder. I have an alert up here. So that's the Euro Aussie on the 165. We'll call it 166 level. So basically a psychological area with this smaller time frame zone. I believe it's a 15, I think. Let's go look here. Go look here. Oh, it's even smaller. So it's a 5 minute. That's basically, or 10 minute. So yeah, we're still a ways from that. I was watching this zone down here. This is very similar to the euro dollar and the pound dollar, which is one thing that we've been looking at this week. I know Nick is in it and making, I think, some money on it. We'll go take a look at pound dollar here in a second. But anyway, this is very similar. So we bounced into this lower supply, but I wasn't too thrilled with it. I was more excited about this, some of these higher up here. What the hell time frame I got that on? Was it a 10 minute? Let's go look over here. Come on, zoom faster. Yeah, here we go. 10 minute supply, guys. That's what I was looking at. 1.66 psychological area. So yeah, that's probably going to be a Monday type trade because that's still quite a few pips away. Euro Aussie, it does move 130 pips a day, so it's possible. Perhaps we could get a slight bounce downwards on that thing. I don't know. We'll find out. NASDAQ, I do believe the NASDAQ is, still giving us a bullish signal. So I did create an alert on it for this area here. Now, NASDAQ is not meeting my rules on the trend. My 8 is below my 21, and rightfully so. It's been a down trending asset of late. So probably going to ignore this, but I can't deny the fact that this zone on top of a zone looks pretty darn good down here. There's one indecision candle followed by a gap. There's a second indecision candle followed by a gap, and all that takes place inside of a 4-hour zone. So there's our 4-hour candle. And then again, I go down to the 1 hour. Look at that. I got 2 zones. I mean, that's pretty nice looking. But unfortunately, the foundation of my trade idea is not there. 8 is below my 21, so I got to skip it. What do you got over here? It would be really great, Zambezi says, if you all just started your streams 3 hours earlier each day. Zambezi, remind me again, where are you at again? I'm sorry, it's hard to keep track of everybody. Let me know again. I'm just trying to. Were you over in the UK? I can't remember. I'll get everybody memorized at some point. It would be great. 3 hours earlier. Yeah. Sounds like you're in the UK. UK-ish area. So I work with, Zambia. That's right. So I work with Samuel and Company. They're out of UK, actually. Probably about the same time frame-ish, time zone, I think. GMT. Oh, you're +2. Okay. Oh, okay, I got you. So it's 7 now, almost 7 o'clock. So 8, 9, 10, 11, 12, 13, 13. So is it 11 a.m. your time? Is that right? What's going on, Muchir Kevin? Muchir Kelvin. Well, another day of paradise. It's Friday. It's a great day by default. I was just telling the rest of the people in here, I'm going to be hopping off here in 15 minutes. That way I can hop on over to Trader Nick's. Okay, so I was looking at it the opposite. I was thinking -2, but yeah, +2. Okay, that makes sense. So yeah, I'll be on here for another 15 minutes. So if you guys have anything you'd like me to shove to the front of the row real quick, let me know. Because like I was telling the group earlier, I'm probably going to start doing 45 minutes in the mornings. That way I don't cut into Trader Nick's streams. And then after the Trader Nick stream is over, the A1 trading stream, then I'll do another 45 minutes after that. So just kind of breaking my day up so I can try to catch some more West Coasters, Hawaiians, other people out in the West that typically have to get up super early if they want to find a good stream. So anyway, yeah, just let me know, guys. But yeah, look, guys, just finishing off NASDAQ. It's just not meeting my rules. I can't in good faith buy an asset if it's not giving me the greatest of signals, trend signals. Okay. Now, a smaller time frame, it looks a little healthier if we're just isolating kind of this price action throughout here. You got to look at it from the higher time frame. It's just down to slightly sideways, and that's why we're not getting the 8 over the 21 EMA over here on the daily chart. Okay, talking about the daily chart over here. Let's zoom in a little bit more. Okay. So anyway, that's the NASI. Oil, guys, what do you think about oil lately? Huh? What do you think? Are we going to have to start taking out a loan from the bank to start putting gas in our tanks? Because this shit's just going crazy, man. Look, here was our Friday close. Here was our Sunday gap open. And it's just completely kept going. This is U.S. oil. And Brent crude is basically the same thing, if not worse. Okay, there's U.S. oil, but let's look at Brent. Look at that. This is nuts, man. So on Brent, because I know a lot of you guys are over there on the other on the across the pond. Friday, when we all went to sleep, okay, before all the craziness started, oil was $73.60 a barrel for you guys. Now we're up to $89. So what percentage of an increase is that? Let's take a quick look at that. We're currently, for the Brent crude, 20% hike in 1 week of trading action, guys. And it's just now Friday. So who knows what today's going to bring in store. Okay, over here closer to my side, let's look at U.S. oil. It's probably just as bad. Okay, we're going to have to start, again, taking – get the hell out of my way. We're going to have to start taking out taking out loans to get oil up or gas up our cars. 27%. So it's even crazier over here, guys. Wow. So you guys across the pond have a 20% hike. We have a 27% hike. 28. Might as well call it 28. That's insane. And that's been obviously, clearly, easily the highest performing asset of the week for the oil traders, okay, the oil speculators out there. And along with the dollar, the Dixie. So as far as oil goes, is there a play to be made off this? Well, it's expensive. It's just going parabolic. And as always, guys, I've been wanting to trade oil, but I can't get a retracement. The best shot I had, and I screwed it up, was back here when I had this 1 hour demand zone that had formed after the Sunday gap. Okay, but that's late in the evening on a Sunday for me. Okay, early Monday for you guys across the pond. But think about that. That's Sunday at 8 p.m. That's when that demand created itself. And then, yeah, see, I came in on Monday because we were all probably, running around like chickens with our heads cut off, trying to figure out how to attack this market. I haven't been through, but just like maybe a couple other black swan events like this. I mean, I've been trading for 12 years, but that's not enough time to experience a whole bunch of different chaoses. Like I mentioned earlier in the week, I had, I watched the depegging of the Swiss franc from the dollar when that sunk a whole lot of people, including the world's largest Forex firm in New Zealand at the time. They were heavily positioned the other way, and they went insolvent just like that. So that's the main one I can remember. And then obviously the craziness of oil shortly after COVID, right? When oil went all the way down to zero and in some cases negative zero. Okay. You guys remember that? Let's look at oil's come a long way. Let's go take a quick trip down memory lane over here. Okay, you guys remember that we had oil all the way down back in right here, back in 2020, right after the COVID, where we went negative Now, it doesn't look like it on the CFD market. If we go into some other markets for oil, though, oil went down, I think, negative 30 or 40 bucks or something in the hole. But you guys remember this? Okay. This is started January. Oil's in the $60, $65 range. And COVID comes out. And then, boom, we drop all the way to the zero on the CFD market. Okay, 1 cent. So oil was 1 cent per barrel. Okay. But then, obviously, everything has since recovered. Got cheaper again there for a while. Now we get over here closer to the current time frame, and it's just parabolic. That's parabolic. Now, oil's used to this. Oil does a lot of these crazy parabolic moves. But, you know, it's always exciting. I don't want to say surprising because it's not really a surprise. It does this a lot when somebody, you know, they get a hangnail or something and oil starts spiking up or down. But it's still exciting every time. Okay. War is hell. War is a racket. And that's exactly why, obviously, we're getting this. But anyway, yeah, just to finish my thought, I mean, that was really the best opportunity I had. And I didn't trade it because I was focused elsewhere. Okay. Now I've since drawn up another demand over here, but we're so far away, guys. I got to start looking higher. Find fair value areas. Okay. Might could find something in this little consolidation here, but it's a long ways away. From this candle forward on a 1 hour chart, we had a very nice large gap. Perhaps that could be a spot. So I'll just basically do this. I'm going to start drawing up a couple of these. I want to look at a couple time frames. I need to pull my moving averages back on. 1 hour chart. Let's go to a 15. See, even a pullback to 200 EMA on a 15 minutes still a long ways away. I mean, I'm asking it to come down to 78 3/4, and we're clear up here at 85.5. Former resistance over here. Maybe we could look at a demand here since that's just slightly below the wick of this resistance. So let's do this. Let's drop it to a 30-minute. Okay, that's probably going to be a decent demand right there. Let me just see what an hour looks like. Okay, so for an hour, just to be on the safe side, yeah, that same candle I was looking at a little bit ago. That would probably be my favorite spot in the short term to find where's my stuff at? Oh, I see now. I see what it was doing for a possible spot. Now that's an hour. I would like my 50 to at least be up here because I would probably just look at this on a 15-minute. So give me my 50 EMA, bounce into the 1 hour zone, and then simultaneously, I'd like to see my 200 EMA bounce into that same zone because obviously it's a different time frame. You know, some different stuff is, well, moving averages are in different places, obviously, depending on the time frame you're looking at. So that's probably what I'm going to be interested in. If you look at the volume spread analysis as we're leaving that zone, look at those big, lovely red candles, guys. That's ultra high volume. That's ultra high trading activity. And who is capable of ultra high trading activity? Big banks, institutions. So that's what I'm going to do. I'm actually going to take my alert and move it up to here because I had that alert a little lower, right? I love this. I mean, really, I like all of the trading action since about London session. Okay, this is all London session. Let's turn my sessions tool on. See, it's orange in the background. That's all London right there. Now, keep in mind, a lot of times what happens, let me show you guys this. Okay. A lot of times if I turn on my, let's see here. Do I still have it up here? Yeah, Asian session. Okay. I don't use this very often, but it is nice to point out at times. Think about this. This is our Asian session. This is the main part of the Asian session, this blue box. Oftentimes, price is going to leave the Asian session on the London session and go in one direction or the other. So in this case, what have we done? We've went up. Okay. And quite often, not every time, but quite often what happens is New York comes in and ruins things for the Londoners. It likes to come in and totally reverse and test out the liquidity on the opposite side of the Asian session. So think of this as its own master pattern, its own consolidation expansion lines, talking about the master pattern as far as, accumulation distribution. And that's what we've got. See, I turned my accumulation distribution. I turned on my master pattern, and we've got a couple consolidation boxes, contractions. Okay. From contraction lines, you typically have expansion lines. So that's what we've gotten. Expansion up. Could we see an expansion down? I don't know, but it wouldn't surprise me because it's going to want to test liquidity on the opposite side. We could see New York come in, push price all the way down, potentially through London and possibly even through Asia. So that's a big ask. I mean, that's a big giant drop if that happens. I'm not saying it's going to. I'm just saying that's the game that the banks play. That'd be about an 8 or 9% drop for Asia, about a 5.5% drop for London. Okay. So I don't know. But to me, London, if I turn on my sessions tool for a second again, yeah. I mean, London, that's just a huge range. 7.25% hike for London session. So all I'm saying is that's a game that likes to get played. You get sideways consolidation, quiet period during Asia, which is the red background. London comes in, takes the direction, takes price in a specific direction, up or down. In this case, up. So if I'm a banker, or if I'm an institution trying to play the same game, I'd be trying to push price the opposite way because you got a lot of stop losses down here. You got a lot of stop losses. I mean, stop losses galore. You got stop losses under here. You got stop losses under here. Okay. You've obviously got stop losses under here. That's a lot of liquidity. That's free money for the banks to be pushing price through. Hey, Xander, what's going on? I'll be off of here in 3 minutes, guys. Remember, hop on over to Trader Nick's stream over here. He usually does anywhere from about a 2 to 2.5, sometimes 3-hour show. Okay, right here. Just click over here at Trader Nick on YouTube. He's got his whole lives. He's doing something right, guys. He's got 528,000 subscribers. Okay. And I do a 30-minute session with him each and every day. It's a good time. I love it. I love the crowd he's got in there. So, but yeah, like I said, 45 minutes today. We'll go over here. And just so you know, the only thing you have to even know about this is if you go to the website, a1trading.com, click on live stream over here, A1 live stream. The current show will, okay, whenever it starts. So this is yesterday's show. But when the new show starts, you'll see it right here. So even if you forget the trade, his handle, just remember a1trading.com. Because again, you'll be able to link right straight to his show, to his website, or to his YouTube page straight from here. But yeah, I'm going to be on today at 9 a.m. Eastern time. Okay. So I'll do my 30 minutes starting in 45 minutes, actually. So anyway, guys, on that note, I'm going to go ahead and hop up out of here. I promised 7:15 my time I'd be out. And that way it'll give me some time to prep, get ready for the show. So, yeah, I'll be back on Monday, my normal time, 6:30. Hopefully I'll have some news on whether or not I got that position. So wish me luck. Cross your fingers for me, your toes, your eyes, your ears. If I get that, that'll obviously free me up to do a lot more for you guys and a lot more streaming, a lot more fun stuff. That's kind of the goal. So anyway, ladies and gents, hop on over there to Trader Nick. I'll be on later. We'll talk to you soon.